Hey, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today, we're going to be talking about how much does a $250,000 annuity pay out. So if you've got $250,000, and that's a very common number that people use, and I have a lot of people that will purchase annuities with $250,000 either from brokerage funds or from an IRA or a TSP or 403B or 401k. All of those will go into, if it's a qualified account, it'll go into an IRA, and that IRA will have that $250,000 annuity payout. So I'm going to show you some different options. If you're looking for highest guaranteed income, I usually recommend the income rider, although you could use the SPIA or the DIA, or you can even use a MIGA. A MIGA contract is a fixed rate product, very similar to a CD, and it's great if you're just looking for a place to park your cash and get some interest. So I'm going to show you exactly what $250,000 will do. Of course, if you have a different number, either lower or higher, go to my calculators on my website, johnstevenson.com, and you will be able to plug in, whatever scenario is best for you. But right now, I'm going to share my screen and kind of show you what this looks like right now with where the rates are right now. Okay, so looking at my screen, I have a couple who is married. They're both 60 years old, and they're putting $250,000 in. And I'm just basing this out of South Carolina, although it's very similar in all the other states as well. And they're taking immediate income. And I'm going to show you what it would look like if they wait. And if they were younger, it will be more as well if they were to defer it out. So there's a lot of different factors here. All right, so looking at $250,000, you can see all the payouts. And this is showing everything. Okay, and this is just the first page. So let me go over here and I'll say top annuity per carrier. This will clean it up a little bit for us. And we're seeing that Prudential is the highest payout, $16,363. That is joint income for as long as you live as well as your spouse. And that's followed by Gillico, Corebridge, Nationwide, Ameritas, all very good carriers. Athene, F&G, a lot of these companies are 100 years old or older. So you're looking for longevity of a company, and if you're looking for higher ratings, you found it. So let's take a look, though. I want to just break this down real quick, and then I'm going to look at all the other numbers. So if we look at Prudential, they're going to pay out $16,363, and they're showing you if the index receives no growth, then your account balance is going to run out by the time you're 72, 73. Now, that doesn't matter if you're taking lifetime income, the account balance is going to run out anyways. So just keep that in mind whenever you buy an income rider or even a SPIA or a DIA. It is designed for highest lifetime income. It's designed for a high pension payout, not for preserving the principal. So the principal does run out eventually, but if you were to die before that happens, it would go to your beneficiaries, which you can see right over here. Here's the death benefit. So if I scroll down further, though, you'll see here's the actual projections of what the account will make as far as interest. And, that has your account balance lasting probably to like 75, 76. So it's not a huge difference. Really, the thing that I want you to focus on the most is the payout, which over your lifetime, according to the projection here, if you live till 95, you're taking out almost $600,000 in lifetime income. If you live longer, it continues to pay out because this is a lifetime income product. Okay. So now let's go back and we'll say, all right, well, John, I'm not going to retire right now. Okay. I'm going to put $250,000 in right now, which is the case for many of you. And I want to retire, let's say in 2 years, because that's when I'm going to take my Social Security payout. And so I want to have the opportunity to have some more growth so that I can have higher income from an annuity contract. Okay. So if we look at that, you can see ClearSpring, Corebridge, Delaware, F&G, Prudential. So Prudential's not bad. They're like 19 grand almost, but not as high as the highest payout at 19,526 with ClearSpring. So just depends on what you're looking for as far as ratings. There's nothing wrong with ClearSpring. They're just a newer company and they don't have as high of a rating, or they're definitely not as old as Prudential. Corebridge, though, they're like 100 years old. They're A-rated. So that might be a good choice if you're looking for highest income, but you still want a company that's been around for a long time. Okay. Otherwise, the highest A+ is Prudential in this case, and then followed by Athene, who is also a great company, and they're over 100 years old and they're A+ as well. So yeah, the income definitely makes a difference. As far as deferral, it's a lot higher just in 2 years than it was at immediate. And the reason for that, let me just show you why. With an income rider, you have guaranteed growth of the benefit value. Okay, so the benefit value if you look over here, it is 314,928 multiplied by 6.2. That gives you the 19,526. So you're probably wondering why, why is that, why is that happening, right? Because you can see over here, if I look at projected growth, my account balance itself doesn't really go up. It goes down a little bit because you got these rider charges over here, which the rider charges are important, okay? They're important because they give you that guaranteed growth rate over to the right, which is the benefit base. That is why you're buying it in the first place. And with ClearSpring, their growth rate is 8%. That's guaranteed, and they'll do it for up to 12 years. That's really good. So when you look at these, this benefit base here, this is absolute. These numbers are guaranteed. That's why if you look at the hypothetical and the guaranteed amounts, they're exactly the same. Okay, so that is really the difference. Is what they're doing is they're taking 250, multiplying it by 8%, and then at the end of the year, multiplying it another 8% because they give you that bonus in the beginning, an 8% bonus. And then every year after that, they'll keep on slapping on that 8%. So that's why you have that guaranteed growth, but you also have the lifetime withdrawal rate, which you can see right here is 6.1, 6.2. That multiplied by that is going to give you that high lifetime income. Really, really important. Okay, so let's go back and we'll say, well, that's great, but I don't want to really retire until I'm 65 because I'm going to wait to take Medicare, okay? I don't want to pay for health insurance, and I just want to work. So I enjoy what I do, and I don't want to retire that early. Well, you can see Nationwide gives you more income. It's $26,000 a year. So ClearSpring is close behind, but they are not the highest payout, at least for this couple, in 5 years. So Nationwide, if you were thinking, I will not retire until at least 65, the Nationwide is the best. Otherwise, if you're not sure, you're thinking, well, I might retire like in 2 years, 3 years, 4 years, ClearSpring might be a little bit better. So you just kind of have to think about your time frame and when you want to retire. All right, let's see, F&G, Corbridge, Prudential's way down here. So they're not bad, 23 grand just about, but definitely not the highest payout for deferring out longer, okay? All right, so if you want to defer out, let's say you want to wait till full retirement age for Social Security, okay? Payouts higher, 30 grand, okay? What if you want to wait till 70, okay? 70 years old, you're going to take full Social Security, like more than just full. You're getting that 24% extra because you waited an extra 3 years. So you're getting more Social Security, plus you let your annuity sit there for 10 years, okay? 10 years gives you 40 grand, $40,000 in income. Isn't that great? It's just because you let that thing sit and grow and compound, okay? So let me show you how that looks with the income rider. You can see right here, see the 8%? Keeps on going every single year. By the time you hit 10 years, it's $582,910. That is guaranteed. That is contractual. Multiply by 6.85, giving you this income. But if you decide to take income earlier, you can see what it is each year, okay? So these are very, very flexible. This is why I like the income riders, because many of us do not know when we want to retire. We have an idea and we want to be able to buy the annuity that is best for us now, maybe a little bit later or even much later. We want to make sure we're picking the right company. And so that's why when you meet with me, we will look at your time frame. If you're going to say, well, I'm going to definitely wait, 2 or 3 years, but definitely not longer than 7 years, then we're going to look at the best annuity for that time frame. We want to make sure that you are not missing out if you decide to wait a couple more years than you intended. That's really, really important when you're looking for guaranteed income. And because I show everything that's available, regardless of my commissions, that's really important too, because a lot of guys will try to sell you a couple of products that will net them the most, but not necessarily pay you the most. So that's really important too. So I would invite you to go to my website, johnstevenson.com, and you'll be able to see all of the annuity payouts, okay? If you're looking at a MYGA will pay you a fixed rate, right? Now they're like 5 to 6%, just depending on what you're looking for. And that's just a place to park your money. And if you want to live off the interest, you can do that too. If you want to buy a SPIA or a DIA, those are the contracts that are irrevocable. You put the money in, you cannot get it back out. But they're very effective for doing like 20 or 30 year period certains. So those are good for that. If you're looking for highest annual income, then the income rider is typically always the best. So anyways, go to my website. You'll be able to check out the calculators there. If you want to buy an annuity, okay, if you're thinking, hey, this might be something I want in my portfolio, then reach out to me. Okay, there is a link below this video. It goes directly to my calendar. Otherwise, you can book a call with me on my website, johnstevenson.com. And this is a Zoom call. So we will get on, I will share my screen, and we will talk about what you're looking for. And I'll show you everything that's available. I'll answer your questions. And then if you're looking to purchase, I'd love to help. So pretty simple. Not going to sit there and try to sell you anything. No one likes to be sold. But if you're looking for someone who's transparent, who's a fiduciary, who shows everything, even if my commissions are, 3% less than what the other guy is pitching to you, it's because it's important to do what's in your best interest. Okay. It all evens out in the end. And so in my opinion, it's just better to show you everything. So anyways, hope that helps. I appreciate you watching. If you like the video, make sure you click the like button and subscribe and share. And if you have questions, just comment below and I'd be happy to answer them. So thanks again. I really appreciate you for watching and we'll see you next time.